Imagine waking up one morning, opening your investment account, and seeing a balance of $1 million. For most people, that sounds impossible. Something reserved for CEOs, tech founders, or people born into wealthy families. But here's something that may surprise you. Every single year, thousands of ordinary Americans quietly become millionaires, not because they won the lottery, not because they inherited millions, and not because they found the next Bitcoin. They simply followed a plan for a very long time. In fact, many of today's millionaires started with less than $1,000. Some started with just a few hundred. The difference wasn't how much money they had. The difference was what they did with it. Here's the biggest mistake people make. They believe becoming rich requires making a huge amount of money, so they spend years chasing higher salaries, better jobs, or the next big opportunity. But while they're waiting, time quietly slips away. And in investing, time is the most valuable asset you'll ever own. Imagine two friends, both want to become millionaires. The first friend earns $150,000 a year, but never invests consistently. He buys a nicer car every few years, upgrades his lifestyle, and tells himself he'll start investing next year. The second friend earns only $65,000 a year. Nothing extraordinary, but every single month he invests a portion of his paycheck into simple index funds. He doesn't try to predict the market. He doesn't chase hot stocks. He simply keeps investing, year after year after year. Now here's the shocking part. After 30 years, the second person often ends up with far more wealth than the first, not because he earned more, but because he allowed his investments to keep working. This completely changes the way you think about money. Your salary helps you survive, but your investments are what create wealth. That's why wealthy people don't ask, "How much money did I make this month?" They ask, "How much money is working for me today?" The moment you understand that difference, everything begins to change. Because real wealth isn't created by working harder forever. It's created by building assets that continue growing even while you're sleeping. And that's exactly what a portfolio does. Think of your portfolio as your personal team of workers. Every dollar you invest becomes another employee. One employee doesn't accomplish much, neither do 10, but hundreds or thousands working every single day for decades can completely transform your financial future. This is why almost every millionaire thinks differently about money. They don't spend every extra dollar they earn. They put those dollars to work, and once money starts working, it begins earning more money. Those earnings create even more earnings, and slowly, almost invisibly, wealth begins compounding. At first, when the progress feels painfully slow, you'll wonder if investing is even worth it. But then something incredible happens. The growth begins accelerating. Your portfolio starts growing faster, not because you're investing dramatically more, but because your previous investments are now helping create new wealth. This is the exact moment where most millionaires separate themselves from everyone else, not through intelligence, not through luck, but through patience. Because building $1 million portfolio isn't about finding one perfect investment. It's about following one simple system, long enough for time to do the heavy lifting, and that's exactly what we're going to build, step by step. In the next section, you'll discover the simple formula that almost every self-made millionaire follows, and why most people ignore it until it's too late. One simple decision can start building $1 million portfolio. The next question becomes obvious. How much money do you actually need to invest? Most people immediately think, probably thousands of dollars every month. But that's exactly where they underestimate the power of time. Let's imagine two people, both have the same goal, to build a $1 million portfolio. The first person waits until they're financially comfortable. They tell themselves, "I'll start investing when I earn more." 5 years pass, nothing changes. Then another 5 years, still waiting. Finally, at age 35, they begin investing. Now meet the second person. She starts at age 25. She doesn't earn a huge salary. She doesn't invest thousands. She simply invests $400 every month into a low-cost S&P 500 index fund. Nothing exciting happens at first. After the first year, the portfolio still looks small. After the second year, it doesn't feel life-changing either. Most people would quit here because our brains naturally expect fast results. But investing doesn't reward impatience, it rewards consistency. As the years pass, something incredible begins happening. The money she invested during the first year starts earning returns. Then those returns begin earning their own returns. A few years later, the same thing happens again. Now, the original investment, the profits, and the profits on those profits are all growing together. This is exactly why compound interest is often called the eighth wonder of the world. At first, growth looks almost invisible. Imagine planting a tiny tree. For years, it barely changes. Then suddenly, its branches spread wider every season, its roots become stronger, and its growth accelerates. Your investment portfolio behaves the same way. The hardest part is surviving those first few years when almost nothing seems to happen. That's where most people fail, not because investing doesn't work, but because they stop right before the magic begins. Millionaires understand something different. They know the first $100,000 is usually the hardest. After that, compound growth starts doing more of the heavy lifting. Instead of your monthly investment creating most of the growth, your portfolio itself begins creating wealth. Imagine climbing a mountain. The first few miles feel exhausting. Every step feels slow. But once you reach the downhill side, gravity starts helping you. Compound interest works exactly the same way. At some point, your money begins working harder than you do. And that's the exact moment when building a $1 million portfolio starts feeling possible instead of impossible. But there's still one important question left. Where should you actually invest your money so it has the best chance of reaching that $1 million goal? Now that you understand why starting early matters, there's another question that can completely change your financial future. Where should you actually invest your money? This is where many beginners make their biggest mistake. They believe building wealth requires finding the perfect stock, so they spend months searching for hidden opportunities, watching YouTube videos, reading social media posts, and chasing the next company everyone is talking about. But here's the surprising truth. Most millionaires didn't become wealthy by finding one magical stock. Instead, they focused on owning hundreds of great companies at the same time. How is that possible? Through index funds. Imagine walking into a giant fruit market. Instead of buying only one apple, you buy the entire basket. If one fruit goes bad, the others still have value. Investing works the same way. An S&P 500 index fund doesn't depend on one company. It owns shares in hundreds of America's biggest businesses, companies like technology leaders, healthcare giants, banks, consumer brands, and industrial companies. Some companies may struggle, others may grow rapidly, but together, they've historically created long-term wealth for patient investors. That's why legendary investor Warren Buffett has repeatedly suggested that most people are better off owning a simple low-cost index fund than trying to pick individual winners. Notice something important. This strategy isn't exciting. There's no secret formula, no overnight success, no gambling, just steady ownership of great businesses year after year. Think of it like planting an entire forest instead of betting everything on one tree. Some trees grow slowly, some grow quickly, a few may even die. But the forest keeps expanding. Your portfolio works exactly the same way. Diversification reduces unnecessary risk while giving your investments the opportunity to grow over decades. This is why experienced investors often focus less on finding the next big winner and more on consistently buying quality assets. Because over time, consistency usually beats prediction, and once you've chosen the right investment, one final habit determines whether you actually reach that $1 million portfolio or give up long before you get there.